Howdy guys, Jimmy Song here. Welcome to another episode of Bitcoin Tech Talk Q&A. This is the show every Monday when I do when I go over my newsletter and all of the news from the previous week from a technical perspective. Anyway, thanks for joining me. I am going to tell you about a few of the other things that I have going on first. This is not the right one. That's last week's. I don't know how that got on there. There we go. All right. So this is the newest one. My newsletter comes every Monday. You can subscribe to the newsletter using the show notes. But yeah, it covers a lot of different things, usually Bitcoin, Lightning, and some other stories. And I got a lot of stories for you this week. But before I go there, let me just tell you about a few of the things that I'm the author of and stuff like that. The Little Bitcoin book, it is available on Amazon. It is also available on audiobook and in Kindle. And it's also available in Spanish and Portuguese. So given all of that, please take a look and see if that's something that you want to give to your friends or something like that. I also have the book Programming Bitcoin from O'Reilly that is available on Amazon for $41. This is a programmer's book. It's meant for people that already know some programming and they can get into it more. I am doing a programming blockchain seminar in Las Vegas, February 20th and 21st. This is the only one that I have scheduled thus far. I may be doing more later in the year, but if you want to learn Bitcoin from me, this is pretty much the only venue that I'll be doing it in the next few months. All right, so Bitcoin Tech Talk, issue number 171. I can't believe I've done that many issues of this newsletter. But yeah, it comes out every Monday. The first story is Bitcoiner maximalism, and it's from AJ Towns, who's behind Taproot, and he put in the pull request. He's been teaching a lot of developers about it, but he's been thinking quite a bit about how to get more people into Bitcoin. So that's this read through that I want to do later in the show, but very good article. This is an interesting discussion from Matt Corallo. This is from the Bitcoin Dev mailing list, and essentially he's going over sort of the goals of a soft fork. How do we do it? As you guys might be familiar, back when SegWit was launching, we went with BIP 9 for the launching, and that required 95% of miners to signal readiness. Now, he's pointing out some of the goals that are very that were there for BIP 9 and what you would want to do with something like Taproot. So first one is avoid activating in the face of significant reasonable directed objection. And that's very reasonable, right? If there are a bunch of people that are saying, hey, this is, we think this is a stupid soft fork, or this is going to jeopardize the network or something like that, then, you need to make sure that that's not something that, that you continue to do. I mean, soft forks, you can't like prevent anyone from doing a soft fork, but from a Bitcoin Core perspective, this is something that you should definitely listen to. Avoid activating within a time frame which does not make high node level adoption likely. So this is basically not releasing it too fast, because you want to give people a chance to sort of upgrade if they want to, especially for exchanges and like businesses. You don't want to do what Ethereum did, which was like give them 2 weeks notice or something like that. You want them to have sufficient time to upgrade when they want to. Of course, there's no obligation, unlike Ethereum, to upgrade. But if they want to use that stuff, then you want to give people a chance to upgrade first. Third one is don't needlessly lose hash power to unupgraded miners. So the miners give it a particular form of security in terms of hash power. If miners don't upgrade, then there's a possibility of a chain split and things like that. So you want to woo as many miners towards a particular soft fork as possible so as to sort of eliminate that possibility. Um, Four, use hash power enforcement to de-risk the upgrade process whenever possible. Yeah, so when you have the majority of hashing power, the game theory is such that anyone that's on the that's not upgrading and mining still on the older software is going to lose to um, the newer one, and that's something that that de-risks chain split. So you want to not have a chain split if possible. Following the will of the community, irrespective of individuals or unreasoned objection, but without ever overruling any reasonable objection. So this is probably the least sort of well defined one, but basically, uh, you know, go with the social consensus, but don't ignore like minority opinion, that sort of thing. So he mentioned Bit9 as part of what caused so much contention with SegWit. BIP8 has been proposed as an alternative, but his his argument is that it can fail 1, 3, and 4. So that could be pretty bad, especially if it goes that way. So, the whole article is worth reading, but those are some of the like sort of concerns that developers have, and it's a fairly big thread. I think Jorge Timon weighs in, and many other people, but well worth reading the discussion because that's coming up. Taproot is going to soft fork, so that's we need to decide on a way to do it first. All right, Bitcoin without internet. What good is Bitcoin if the internet fails? And this is a common sort of thing that I've heard before, but yeah, there are ways to get around that using satellites and solar power and things like that. So very good sort of perspective. It's mostly just like looking at Neil's tweet storm. I just pulled up this one because it's easier to look at all of them. All right, erasure coding for bandwidth reduction. This is a paper from, I guess, Ming Jin, Zhao Chen, Xian Zheng Lin. I know I'm like totally not doing their names justice, but using erasure coding in itself is really interesting. That's a particular type of way to reduce the bandwidth necessary. So yeah, if you're interested in that sort of thing, please check it out. And this is from Jeremy Rubin. He's going to be conducting a seminar on Object Template Verify on February 1st. So I think that's a Saturday, but yeah, there's a whole thing that you can sign up for if you're interested in Object Template Verify. If you're not familiar, Object Template Verify makes it so that say you're an exchange and you have to pay out like 2,000 people. You could do it in one transaction, but then if it's like in the middle of the day and there's a lot of fee pressure, you might be paying more than you might want to. So Object Template Verify makes it so that you can spend it to one output, and all of the people that are receiving, they can pay in order to get it faster or just leave it on chain and then redeem when they want to. And sort of slowly over time, you use up block space that isn't being used sort of during the middle of the night or something like that. So interesting stuff. He'll have a workshop on it. Encourage you guys to attend if you're so interested. All right, so Fidelity published this 2019 Bitcoin retrospective, and yeah, it's interesting because they are obviously an institutional player and they're very pro Bitcoin, and here's what they see as important: emerging regulated derivatives markets, and that's definitely coming. I think CME starts trading futures tomorrow. And these are derivatives that are unique to digital assets. Uh, there's a lot of interest in stuff like GBTC, which they're noticing. Um, Square is definitely helping Bitcoin adoption and basically realized value. This is people that have cashed out essentially, has reached an all-time high. So, this is an interesting perspective, and it's a very good report with lots of graphs, and you can kind of see how Bitcoin is trending by a lot of this stuff. So encourage you to read the rest of it. All right, Pine and Azteco. So I hadn't heard of Pine until I read this article by Beautyon. But basically, I think Azteco is where Beautyon works. Pine is a second generation consumer Bitcoin wallet, and essentially, it doesn't have addresses. It's based on a username, and it's using some form of Lightning, I think, and it's very easy to use. And I haven't used it myself, but I'm very curious if this sort of thing catches on, and it is sort of like it is the sort of thing that makes it as easy as something like Venmo or Cash App or something like that, which I'm hoping, not sure if this is exactly decentralized. If you have a username, you need some sort of register, which tends to be centralized. So we'll see exactly, how that does. But yeah, check out the article, check out the wallet, and what's going on there. All right, I wrote an article last week, learning economics, and this is basically all about, Safety's class, the Bitcoin Standard Academy, and I have to tell you, this is an excellent, excellent class if you want to know about Austrian economics and how to think about economics, because they really don't teach you in university very well. In fact, they basically indoctrinate you in Keynesian ideology, which is basically government sponsored. Safety basically goes from first principles, and it's much more like a philosophy course, because each thing derives off of the previous statement and so on. So it's more rigorous, it's more mathematical, or logical in that way, and I basically recommend the class, and that's what this article is about. All right, so Coinmetrics released this article on State of the Network issue 32, and basically it's all about Stellar and how they have mining rewards, but essentially because they're proof of stake, they end up doing something like 98% of all newly mined coins go to the Stellar Foundation, which is kind of crazy. Like, despite them cutting their supply and so on, it seems to not have helped. This is the Cantillon effect in action, and this is why proof of stake is like really kind of weird, because essentially you're not you're making the rich richer by making it that way. And all right. So anyway, those are the stories this week. Let's go to my Twitter feed and go through some of those, and we will go. And actually, are there any questions? Hey Jimmy, see you on the felt. I might not be playing poker this year. I'm very new to this space and about to buy my first Bitcoin. What's the difference between BSV and BTC? Yeah, BTC is the one you should buy, just full stop. Okay, all right. So that was the only question. All right, let's go through everything that I did all the tweets that I made this week. All right, privacy tech evolves when an adversary starts punishing those without it. As we haven't had enough adversaries, I see privacy tech as immature. This might be worth like expanding into an article, but here's the thing about security, and privacy is a security matter, right? Like if you lose your privacy, it's a security hole, and oftentimes people want to be very secure about the things that are private. They're really more or less like subsets of each other in many ways. Um, but basically, privacy tech uh, is maybe not as far along in Bitcoin because there's no adversary, right? If the U.S. government were arresting anyone that they could trace to a particular Bitcoin, privacy tech would evolve very quickly because there would be a lot of motivation for people to hide it. But we don't have an adversary, and therefore it means that we're not going to get as many privacy tech features in. The people that are interested are working on it, but unless it's sort of used by the market, it's proved out by the market. If it's not like sort of delighting customers, as they would say in like the UX world, right? Like if there's no consumer demand, it's not going to really evolve, and that's basically my point there. I retweeted something from about a year ago. Bitcoin is the money of enemies. The soundness of money doesn't benefit from group hugs, therefore calls for unity, civility, accounting community, etc. are all grossly misguided when it comes to Bitcoin. Such concepts are used to control others' behavior. And I tweeted something else that's similar a little bit later. This was my most popular tweet this week. The year is 2025. Peter Schiff gloats after Bitcoin drops 3% to $287,500. $287,500. Vitalik Buterin makes another hard fork announcement after ETH 2.0 delays 6 more months. IBM has yet to find a use case for blockchain and enterprise. Roger Ver is still crying about cash. These are all kind of things that seem to have been happening forever. There's always hard forks in Ethereum, and Peter Schiff's always gloating whenever Bitcoin drops even a little bit, and IBM is always touting Hyperledger without actually finding any use cases, and Roger Ver continues to cry about cash. So I guess that explains why, I'm not sure what made it so popular, but it was. All right, I guess Ryan thinks CSW is Satoshi. That's just kind of a stupid tweet, but yeah. Bull markets are what happened to you while you're busy holding. And yeah, this is what you do as a holder is you let the bull markets come to you instead of going to the bull markets. If you are doing the latter, then that's you're being a trader. So as a holder, this is what you wait for, and you have to kind of wait patiently. I know a lot of people are waiting for that breakout and stuff like that, but to a degree, if you busy yourself holding or accumulating or stacking, then that's going to help a lot more. Supporting BTC and owning BTC are two different things. Supporting BTC means actively supporting its adoption and development. Owning BTC could be the result of many portfolio strategies, including actively opposing BTC, but holding some as a hedge in case of failure. This is just plainly true. There are people like Roger Ver that are actively denigrating Bitcoin while holding some in case Bitcoin Cash doesn't go anywhere. This is why he's afraid to bet me. Similar thing with Joseph Lubin and Vitalik Buterin. All of these people in the altcoin space, they own some Bitcoin because they want to use it as a hedge in case their scam doesn't work out. And that's essentially why you can't just say somebody's pro Bitcoin because they own some. That's simply not true. All right, unpopular opinion. Fungibility doesn't matter until there's a real adversary that attacks a good percentage of the Bitcoiners. This is similar to the previous tweet that I gave. What's your best this could only happen in Bitcoin story? I thought this would get a lot more engagement, but it turns out not that many. So we'll see. The main cause of Bitcoin derangement syndrome is not being able to admit that Bitcoin was right and that you were wrong. Both no-coiners and altcoiners suffer from this syndrome. This includes people like Roger Ver and Peter Schiff, right? And Vitalik Buterin and Joe Lubin and all these people. They don't want to admit that Bitcoin is right and that they were wrong. Maybe at some point, some of them believed in Bitcoin and then moved on to something else, thinking that was the new Bitcoin. They just don't want to admit that they were wrong, and that's unfortunately the big cause of why they denigrate it so much. In a world that's changing, something that stays constant has value. One BTC will always be 1/21 millionth of the total supply of Bitcoin, and that is the key to the economic value of Bitcoin. Is that it stays the supply is constant, and we've never had an asset like that before. You can obsess about price or actually learn something. Advancing Bitcoin is having a conference in London, February 6th and 7th. I'm going to be speaking there, and this was my shout out to Leon and his boys that are, and his crew, I guess, that are putting that on. There are only two things that are truly scarce: time and Bitcoin. Trading your time for anything less valuable is not valuing yourself enough. Conversely, paying Bitcoin for something is the ultimate compliment. I mean, if you really value Bitcoins, you wouldn't be spending it, right? Like this is the thing. You only pay with Bitcoin when it's worth it, right? Like when it's absolutely worth it. And this is the thing that a lot of people that are focused on payments don't get, is that it's a really good store of value. Why would you spend it, right? Like in the only time you would do that is if you have no other choice. Civility is engagement in polite lies. Much like civic responsibility, it's a moral constraint designed to give you less freedom and the rulers more authority. Bitcoin is just one step in rejecting the moral authority of the state. And the moral authority of the state comes out in something like civility, in something like civic responsibility. It's their way to get you to do something without sort of with a hint of a threat of violence, but not really. It's more sort of social condemnation or something like that. And I don't appreciate all those people that are calling for civility or getting along or whatever, because that's an attempt at trying to control others' behavior, and it's essentially an argument from authority. And my Sunday survey was interesting. What's your go-to website to check prices? Coin market cap, 46.7%. Had no idea. Looks like Nomics and CoinCap are almost nobody uses. TradingView is also very popular. Lots of other choices. I didn't even know about most of these sites. CoinLib or something like that. Bitcoin Wisdom, Quantify Crypto, Clark Moody. I've known about that one. But tons of really, really cool websites to check on the prices of various things. The more a society saves, the more wealth they generate through capital investment. Your holding now is not only good for you, but as that savings translates to more skin in the game targeted capital investment, it's good for civilization. The thing about holding is that you are essentially saving for the future. And as you save, you're going to want to do something with that capital to generate even more capital. This is what investment is supposed to be. Right now, most investment is very restricted. It's more or less just stocks, or unless you happen to be an accredited investor or something like that. So it's stocks, maybe real estate, maybe metals or something like that. The choices that the government gives you or allows you to invest in is relatively small. And but the fact that you can save in Bitcoin means that you can invest later into other things that are better for civilization, because it's your money and you're going to invest it based on the value of Bitcoin, not the value of dollars. Dollars are depreciating rapidly, so there's more of an incentive to just sort of invest in whatever comes along. Whereas with Bitcoin, because it's scarce, you're much more selective about it. But being more selective means that only the really good projects get funded instead of crap like WeWork. And as a result, you're civilization creating more value for everybody else, instead of having some insane percentage of startups fail. And that's largely because the only investment that they're going to get are from VCs that want billion-dollar unicorns and stuff like that. So by saving, we're sort of filling in the gap between VC level companies, billion-dollar unicorns, and an individual consultant or something like that. There's a lot more entities in between that can be funded, and that's going to build civilization. Capital is cheap because there's no money, no so much money printing. That's why every VC is scouring the earth for good deals. There just aren't that many. And this is from Sam Altman's essay. Before going any further, I should point out that this is a particularly hard time to invest in startups. It's easier right now to be a capital taker than a capital giver. It seems that more people want to be investors than founders, and there's an apparent never ending flow of capital looking for access to startups. The law of supply and demand has done its thing. Valuations have risen, and the best investment opportunities are flooded with interest. As a friend of mine recently observed, it's much easier to get LPs to give you money for your seed fund than it is to get a meaningful allocation of a hot deal. So this is an interesting thing, right? Because he's noticing that there's a lot of money, and if there's a lot of money, well, what happens? Well, it tends to flow towards investment because it's all newly printed money. And VCs are noticing that it's much easier to raise a round from LPs because there's so much money out there than to find companies. And it's because there are a lot more rent seekers than there are producers. And this is why you can't really find good deals. And this is why every VC is scouring the earth to find them. Anyway, thought that was interesting. Yeah, let me know if you have any questions about any of my tweets. Let's see. All right, so let's read through Anthony Towns's Bitcoiner maximalism. I've been trying to come up with a good way of thinking about what to prioritize in Bitcoin work for a little while now. There's so much interesting stuff going around, all of it good for Bitcoin, that you need some way to figure out which bits are more important or urgent than others. One way to think about it is what will we make the price go up? I think that's another is how do we beat all the altcoins? But both of these seem a bit limited in scope. Maybe an alternative is to think about it backwards. If Bitcoin gets better, more people will want to be Bitcoiners. So what would it take to make more people Bitcoiners? That sort of question is a pretty common one in sales and marketing, and they tend to use sales funnels for analyzing it. Before becoming a customer, people have to hear about a product, be interested in it, and find it for sale somewhere, and you get some attrition at each step. Reducing the attrition at any step without making it worse at any other then increases your sales and your numbers go up. Now, those of you in sales, this is a familiar analogy, but what a sales funnel is marketing is sort of like the widest funnel, right? Like people have heard of who you are. They're not going to buy your product unless they've heard of your product in the first place. That's sort of the widest end of the funnel. And then you keep qualifying them until they're ready to buy, in which case you have a sale. And what a lot of salespeople talk about is making sure more people are coming through the funnel. And it tends to be a numbers game in any sort of sales situation. So, like getting more people to know about it is a critical aspect. And that's the analogy that he's working with. One way of looking at that might be to consider the normal sorts of things Bitcoiners do. They buy some Bitcoin, set up their own wallet, and have control over their funds, run a full node, and maybe eventually start giving some input into Bitcoin's development, whether that be in the form of code, discussion, investment, or making bets over Twitter. The problem with thinking about things that way is that while there are some clear incentives for the first steps, Bitcoin's increasing in value, so a good investment, or at least better than earning negative rates. Self-custody reduces the risk of some company running off with all the coins that you were yours. There's a breakdown after that. Having a hardware wallet under your mattress is cheap and easy, but running a full node constantly is an ongoing cost and maintenance burden. And what's the actual direct benefit to you? If you look at the numbers, those steps are something like 8 billion to 160 million to 4 million to 50,000 to maybe 900. But there's no obvious levers to use to increase either the 2.5% or 1.25% figures. So that approach doesn't seem that useful. So he's describing the funnel. At the top is 8 billion people on the planet. About 2 million 2% have heard of Bitcoin, and then 4 million maybe have Bitcoin, 50,000 self-custody, and 900 these are the things that he listed earlier. A different way of looking at it might be to first break out people who regularly transact with their Bitcoin balance rather than just buying and holding. The idea being that this covers traders who actively manage their Bitcoin investment, merchants who sell products for Bitcoin, people who get paid in Bitcoin, and so on. I've got no idea what a valid number for this is. BitPay claims to be trusted by thousands of businesses worldwide, which makes it sound like the number probably isn't in the millions. So I picked 250,000. Going from actively transacting to self-custody is a different step than self-custody for buying and holding. Don't think of installing a mobile wallet or buying a hardware wallet, but rather as using software like BTC Pay or Lightning, rather than hosted solutions like BitPay or Travel by Bit. I've picked 15,000 as the number there based on the number of Lightning nodes reported by 1ml.com and rounded up a bit. So this is everyone. It's people with a Bitcoin balance, people who transact with Bitcoin, people who self-custody, and then someone who actually thinks about the coding aspect. The nice thing about that approach is that the incentives at each stage are a fair bit cleaner. You maintain a Bitcoin balance if it works as a store of value and fits into your investment strategy. You go from just holding a Bitcoin balance to actively transacting with it if spending Bitcoin is less of a pain than spending from your bank account, which makes it pretty clear why that step has a 99.85% attrition rate and what to do about it. Likewise, you go from transacting in general to self-custody when you decide that the cost of using a Bitcoin bank outweigh the benefits. Risk of loss of funds or censorship, KYC frustrations, privacy concerns versus ease of setup, and someone else taking care of ongoing maintenance. Having that option is hopefully a good incentive for businesses and regulators to keep those risks, frustrations, and concerns relatively rare for everyone that doesn't self-custody as well. Going from actively using Bitcoin to helping it develop is still a big step, but it's also a fairly natural one, or so it seems to me. I think those levels also fit fairly well with business models. Getting people into Bitcoin is in the first place is financial education advice and exchange services. Actively transacting is banking and merchant services. Self-custody is hardware wallets and things like BTC Pay and Lightning nodes. Even consensus participation has been monetized by the likes of Bitfinex's chain split tokens. A nice thing about this approach is that self-custody for people actively transacting generally implies running a node for technical reasons. And at that point, the costs of running a node are much smaller deal. You're getting regular benefits from your regular transactions. So the small regular costs of running a full node are much easier to justify. Yeah, it's amortized over every transaction. Essentially, this is the funnel that he's looking at, and he's arguing that there's attrition at each level. And from a sales perspective, you want to optimize each level or where you're losing the most people and try to up the percentages there. One way to view those levels might be as pre-coiner, store of value, method of payment, self-sovereign, and decentralized, with each level implicitly depending on previous levels. You can't pay for things with money that nobody values. There's no point in being in control of money that no one will accept or that's not worth anything. There's no point having decentralized money if it can be stolen from you, etc. There's some circularity too, though. There's no point storing value if you can eventually transfer it. And a significant part of the value proposition of Bitcoin for store of value or method of payment is that you can control your own funds and that there isn't a central group able to inflate the money supply, confiscate funds, or block transactions. What does that mean for priorities? I think that there's a few general principles you can draw from the above. From an industry growth point of view, increasing the percentages for the top two levels and maintaining the percentages for the bottom two seem like a good focus. Getting 1 billion people owning Bitcoin and hundreds of millions using it, even with only 12 million people running their own full node and 750,000 people actively paying attention to how Bitcoin works and evolves, seems like it could work out. This approach has store value as a foundation and other properties of Bitcoin rely on, if that makes sense. It probably means messing with the store value features of Bitcoin is a really, really risky idea. Instead, it's probably more important to work on things that reinforce the existing foundations than need new ideas to change them. The having Bitcoin to transacting with Bitcoin step is one that needs the most work, probably in a million areas, not just all the things on the to-do list for Lightning, but UX stuff and working with regulators to avoid knee-jerk money laundering concerns, or with tax agencies to reduce the reporting burden due to Bitcoin valuation changes, to deploying point-of-sale systems and whatever else. If we do manage to get lots more people holding Bitcoin and or lots more people transacting with it, then maintaining the percentages of people doing self-custody or contributing in general will be hard and require a lot of effort. So for me, with an open source developer's perspective, I think that adds up to number one priority is keeping Bitcoin working technically, trying to avoid bugs, resist potential attacks, both ones that we know about and those people have come up with. Stay backwards compatible, do clean upgrades. Things to work on here include monitoring, tests, code analysis, code reviews, etc. This also means keeping development of Bitcoin itself relatively slow, since all these things take time and effort. Number two priority is, I think, Lightning. It seems the best approach for payments, both for people who want to do self-custody and as the underlying payments mechanism for Bitcoin custodians to use when their customers instruct them to make a payment. There's a lot of work to be done there: routing, reliability, spam attack resistance, privacy, wallet integration, etc. Other payment-related things like BTC Pay are also probably pretty high impact. After that, I think being prepared for growth is the next thing. Finding ways of doing things more efficiently, batching, consolidation, coping dynamically with changes to the system, fee estimation, developing standards to make it easy to interoperate with new entrants to the ecosystem, PSBT manuscript, and having good explanations of how Bitcoin works and why it works that way to newcomers, podcasts, books, academic papers, etc. And more particularly, I think that means that I want to prioritize stability over new features. So work on analysis and reviews and tests and no rushing the Taproot software. And as far as new features go, I'm more interested in ones that can provide boosts to Lightning or payments in general. So Taproot and any Prev out stay high on my list. But growth and interoperability are still important. So I don't have to ignore cool things like CTV, fortunately. So, this is how a developer like AJ Towns, who's the author of the Taproot BIP, and that's the next soft fork happening. This is how he thinks about, what to prioritize, or his thought process in getting more people involved in Bitcoin. And everything is ultimately driven by what he thinks is important, and the reasoning is very sound. He's got a very interesting model of how to think about all of this, and having a Bitcoin balance versus transacting with Bitcoin and self-custody and so on. You lose a significant number over each step in the funnel. But what he's saying here is by working on this level, Bitcoin balance to transacting with Bitcoin, and like the other level, everyone to having a Bitcoin balance. The key things that are important there are, stability and Lightning, and this is exactly, this is exactly why it's continuing to go. All right. All right, so let me show a few things. Little Bitcoin book is happening, or is available, and you can get it straight from Amazon. 82 ratings, 5 stars. Programming Bitcoin, 37 ratings, 4.5 stars. It's available on Amazon as well. Programming Blockchain is in Las Vegas, February 20th and 21st. I will be at Advancing Bitcoin on February 6th and 7th. I'm half thinking about maybe doing a carnivory dinner, but probably not. We also have not just Advancing Bitcoin, but Unconfiscatable, that's happening later in February, and this is Tone's conference. I will be doing my seminar there. There's apparently a poker tournament and everything else, but I'm gonna leave before the poker tournament. But it's going to be a lot of fun, and there's gonna be some good stuff there. All right, so that is about it. Thank you for watching. Let's see if there are any other questions. Lots of random people. All right. Well, anyway, thank you for watching. I want to say this at the end of everything, starting in the new year. I know I missed last week, but Fiat delenda est. This song is done.